welcome to a bright new week of MyStockScanner Live. This is your shortcut to clarity in a noisy market. We break down the stories, we strip out the hype, and then we score every stock with one simple system. It's called the 3-point playbook. It's all about quality, upside, and timing. These two gents are Hans-Henrik Nielsen and Liam Flavell, and we have questions for you two straight off the bat, sent to us on FOMO at MyStockScanner.com. A lot of questions about, is it time to be fearful? Is it time to be optimistic? Hans-Henrik, you wrote in the market scan this morning that the CEO of JP Morgan predicted a crash within the next 2 years. I would be fearful now.
Yeah, he's a solid guy, and when he says there's a 30% chance or risk of a crash, we should listen to it, definitely.
Then we need to take it serious. We'll talk more about it in a second. Liam, this week it is finally, somebody says, because I feel like we've been talking about it for 3 weeks already. Nvidia is the headline all over this week. They're coming out with numbers on Wednesday. We're going to do an extra show on Thursday. I might say that right away. On noon on Thursday, it's going to be all dedicated to Nvidia. I know that you're a strong believer in Jensen Huang and also in Nvidia. Do you think they're going to knock it out of the park, even though the Taiwan Semiconductors kind of say things are slowing down?
I think they will, and I think you've got to take the slowing down talk from Taiwan with a pinch of salt, because they slowed down to 16.5% growth in a month. So that's still pretty punchy. So yeah, everything I read points to Nvidia chips being in massive demand. Even the old ones from 3 years ago are snapped up. So yeah, I'm looking for good things.
But somebody's selling Nvidia shares, and we're going to talk about it on the show here. And we will be talking about other things than Nvidia. And as said, somebody's selling Nvidia. It's Peter Thiel, and some of you might say Peter who. We will sort of give you an update on who he is and what his background is. And because it's Monday, we open up the 3-point playbook portfolio, which is up by, hang on to your seats, 32.1% on the year. And we are almost only a little over 50% invested. We had a question about that, why we're so little in the market. We'll get to that. And then we also take a look at Warren Buffett's final buy. And no, we're not going to talk Google. We're going to talk about something else. And number of the day is, we keep it positive. It was almost over the weekend, it was a little bit negative, but today it's positive. It's 2.41%. What it is regarding to, we will get to at the end of the show. But first, I know that we're not fear-mongering. We never are. We're optimistic. We're cautious. But this guy in the picture, the CEO of JP Morgan, said that he was foreseeing a crash. He didn't say when, Hans-Henrik, but there was a little bit of fear-mongering in it. He kind of said, it's going to be 26, it's going to be 27, I can't say when. You tell us when then. You tell us when, Hans-Henrik.
First of all, Jamie Dimon here is a guy you should listen to. He has been in bank management since 1997, I think it was. So he had been through the dot-com crash. He was a leader of JP Morgan, one of the largest banks, up till the financial crisis. He actually guessed or predicted kind of the financial crisis. So he steered JP Morgan through that. And when he's out now saying that there are some things that really need fixing and that he sees a 30% risk of a crash. Remember, correction is 10% and bear market is 20%. And crash is 30 or more down. And when he sees a 30% risk of a crash in 26 or 27, he talked a lot about why. There was the tax system in US, there was a tariff war, there was the entire AI investment capex wave that we have talked a lot about. So he sees a lot of fragile parts in the economy, and well, he's not been specific with a date, but 26 or 27.
But Hans Henrik, I gotta hold you to it just for a little second more here, because of course he has insight. He's one of the big elephants in any room he walks into, whether it be the White House or it be meetings with other CEOs. He knows what he's talking about.
Yeah.
Do we have any idea what it is that he's seeing?
Now, one of the things he really points out is he had a famous quote in October where he talked about cockroaches. And you could say, well, what is a cockroach in finance? But that was because there was one or two subprime car lenders, companies that lend money out to people that actually can't afford a car and never will, but they still lend money out to them. And they went bankrupt, these two companies, and JP Morgan lost some money on them. And he was asked about that, and he said, what I learned from 2008 was that if there's one cockroach, there's probably more, which means that he sees a big systemic risk for a lot of these lending companies to actually go bankrupt, which could destroy much of the banking sector.
We shall see. As said, he is kicking the can down the road a little bit, 26 or 27. If we return to current day, then we have somebody who's been out selling their entire holdings of Nvidia stocks. And Liam, the guy who came out and said that over the weekend, or even before the weekend, is Peter Thiel. He also sold off all his Tesla stocks. Of course, he can be needing money for a down payment on I'm going to say a country, because it's that amount of money that we're talking here. But why would he sell? We're coming up to earnings. Does he know something?
He could do. He could do. You never know. We saw a big sell from SoftBank last week as well, where they sold all of their shares in Nvidia. SoftBank haven't got a particularly good track record of that. They sold in 2019 last time, and if they'd held, they would have gained $232 billion. So this could be the same. You never know. With Peter Thiel, he's very, very well connected in US government, in the US economy, everywhere around the world. He's one of those big players out there. And, so he may well know something. We'll never know or we won't know until Thursday morning, probably, or Wednesday afternoon.
Hans Henrik, you, of course, and Liam as well, you know Peter Thiel not personally, but you know his history, and he has a good knack of things. He threw in $500,000 in a small company back in the day called Facebook when they needed some money. He was one of the first investors there.
Absolutely. Not many people actually know him. They know Mark Zuckerberg. They know Donald Trump. They know all of these that have been also before Trump were president. Peter Thiel has kind of been that backing guy. He co-founded PayPal. He co-founded Palantir. Where he's still a big guy. As you said, he was one of the first investor in Facebook. So he has made billions and billions of these. You can see about $21 billion officially. And yes, when he dumps his entire Nvidia stake and slashes a Tesla holding, he's not normally a guy that is out saying, now I'm selling this, now I'm buying that. So if he makes a drastic decision on this, he might know something that we don't.
I would just point out that Nvidia is down 10.5% from its absolute peak. So we are in correction territory for that.
Yeah, absolutely.
Okay, I thought you were going to say pre-market. Then
that would be a shock.
Yeah, we would have started some jitters right there. Let's go from somebody selling to somebody buying, because he might be signing off at New Year's, and he has said his last speech at the shareholders meetings, and everybody kind of knew or know by now that he bought Google, because that has really been told here, there, and everywhere. But Jens, he bought something else, something that he already had, but he really went to market and bought a lot of shares in a company called Troop. But let's start with Google. Why did he get into Google? Because he clearly haven't seen the 3-point playbook.
No, the funny thing is that normally when we hear that Buffett is buying something, we often check our value chart here, and we know Buffett wants to buy cheap. He want to buy good value. So normally when he buys something, we can see that he buys it at the bottom, what we call the cheap zone. Right now, at least in our value chart, Google is at the very expensive zone, which indicates that he might know something that we don't, which is absolutely a possibility. We don't know everything. If we look at Chop here, that is a bit of a funny story, because he bought Chop first time quite largely back here in January, or actually it was December 2023. And that is where our model actually told us at that point. We checked up on it and we thought to ourselves, that was funny. He actually timed it quite well. We bought it as well, and we sold it somewhere up here. We just learned that Buffett, he just stacked up on Chop. And the thing is that since then, it has gone sideways. And what we can see with the value chart is that if earnings go up and the price goes sideways, then at some point, the same price of the stock actually becomes a value price, because it earns more and more and more. So it's getting better and better value. So from up here, it was actually expensive, but the Buffett has waited and waited patiently now, and now it's just about being good value again. And now he's taking some extra positions.
Is it a stock that we would put into the 3-point playbook? We're coming to it in a minute, but does it hold the things that we're looking for in a stock?
Absolutely. It is a good quality stock. And we saw that already earlier on. We can see the earnings per share is going up. Revenue is set to drop a bit, but there can be some structural changes there. We can see the PEG ratio is fairly low. There is a bit of a hole here in the return on capital, but they are overall a very solid company. They can easily pay their interest rates. And then looking at the value chart, it is at a place where we could start looking at it. But the risk to reward here is not right where we want it. When we see a bear case of 10% and a base case of 10%, we do like this to be 2, 3, 4 times the risk. So it's not exactly where we want it. So we haven't listened well enough to us, I think.
Or we haven't listened well enough to him.
Maybe that's it.
One thing you can say about us, and I know that somebody will consider this boring, because we're kind of sticking to the strategy all the time. We're not taking chances and stuff like that. But that is exactly what Buffett has done over all these years. He basically just takes the boring, grinding stocks that just like an insurance company, and then he holds on to them.
Yeah, the thing with Buffett is I have seen in several Facebook groups the last couple of weeks where people are saying he's completely out of touch. He don't get the current AI tech. And the funny thing is that I heard the exact same thing before the .com crash, where he didn't go into internet stocks because they didn't make money. And people were laughing at him and saying, he's such an old dinosaur. He don't get anything. And he was a young guy, around 70 at that point. The funny thing is that he often ends up laughing because when things crashes and he has a lot of cash, he would come out on the good side.
I saw a post from him back in 2000, and he will put out his 2000 letter saying, we bought into textiles and industrials and various others. Try and contain your excitement. So he's a class act that we're not.
He is a class act, and I don't honestly. I don't think that he cares that he's called a dinosaur. Come on, he's 95.
I think he takes that as a positive.
Yeah, I think so too. And speaking about, I won't say laughing all the way to the bank. I would say in that sense, we're smiling, and we're smiling to the tune of 32.1%. That is the 3-point playbook portfolio that we hold. That is the return for now until the year so far. And guys, there's another thing that we need to sort of take into consideration with that. That is also including the fluctuation in the dollar.
Yes, yeah, it is. It's if we look down here, the S&P 500 is around 15% up, and that's our benchmark here. It's 15% up on the year, but in euro terms, which is what our portfolio is calculated in, it's only 3% up, 3.5% up. So we've done quite well. We're obviously the S&P 500 is fully exposed over to the dollar, whereas we've been in. We need to do some calculations on it actually, but we're probably about 50-50 euro compared to dollar stocks out there.
Yeah, overall over the year.
Yeah. So, and we had
one question we had. I'm going to bring that up to you guys. Is that right now we're sitting around 50% invested, and somebody has written us an email at FOMO@MyStockScanner.com, FOMO@MyStockScanner.com. That's the email for us, and asked. He says that he's almost 100% invested. Should he start getting out of the market and get down to 50%? Why are we sitting at 50? I think it's 53%.
Yes, the important thing here is that the 53% in our portfolio is not an active decision we have made. It's not in our strategy that we say, oh, we see the market go down now, so we'll only be 50% invested. We have our buy signals, we have our sell signals. And when we get a lot more sell signals than we get buy signals, then our portfolio drops in exposure, because right now it's hard to find the really good buys according to our strategy. So I would actually like to be a bit higher, maybe 60, 65. We have our models that says we could go a bit more up. So it's not an active decision, and people should absolutely do what fits their own risk profile best.
And Liam, if we look into, we had little movements, and you have to be a member of our website and paying member of our website to get to see all the movements. That's one of the big benefits that you get from being a member, that you get to see what we bought and sold. But one of the stocks that we take a little pride into it, is Endra Sistema, a Spanish stock that we picked up not long ago. And Liam, take us through it. Tell us when we picked it up and how well it's doing.
We picked it up about 19th of September, I think it was.
2 months ago.
30% so far in that time. Or was it 40%?
I think it's 41% actually.
Should be knowing that. I don't. Yeah. So I mean, from that point of view, in 2 months, 40%. Yeah, it's one of our better ones. We've already made quite a significant amount of money on it at the beginning of the year as well, because this is one of our star stocks as well that went up with all the defence spending that got announced in February. If we look at it from a 3-point playbook, we asked 3 basic questions. Is it a quality company? Is it undervalued? And is it a good time to buy? So if we look at point 1 on the platform, we can see that pretty much everything is green. And green means, yep, everything's good. So we can see quality score, it's 93 out of 100. So it's one of the best quality companies in the Madrid side of things, and also the region as well. You can see that earnings over the last few years has just been going up and up and up, and is still these gold bars here. They're showing that the analysts think that the stock's going to go up as well in the next couple of years. The PEG ratio, which shows just how much of that growth is built into the price, is below 2. So it's 0.9 in this case. So it shows that there is room for more growth as well. So just looking at that top line, I can tell within 5 seconds that, yes, this is a company that I'm going to be interested in. And that's why we've got this page structured in the way it is, because it's just so easy to actually spot a good quality stock that I can actually spend some more time drilling down into. As Hans talked about earlier on, we got some returns on capital and equity here, which are pretty good. They show how efficient the company uses the money that is invested on a dollar for dollar basis or a euro for euro basis. Free cash flow is doing really well. That's how much cash is generated by the business. And you can see they haven't got a debt problem at all there. So everything, for the first question, that's a massive tick in the box. It's a really, everyone should want companies like Indra in their portfolio. From a valuation point of view, which is the second question, we ask, is it cheap? And the answer right now is no, it's not. So we put in 3 different values, 3 different lines here. The green line at the top is the bull case. So that's if everything goes right for the company. And you can see that Indira is just at the top there. So it doesn't mean it can't go up anymore. It just means from what the analysts are looking at, it's up in the expensive zone. So we wouldn't necessarily buy it now. Doesn't mean we come out of it, but we won't buy it now.
Yeah, because, Liam, I'm going to stop you right there, because that is a question that we get over and over again. When do we get out? Because the thing is that right now it looks like it's going to hit the very top isn't it time to sell now then?
Well, no, because you look here, and this is just based on the current sort of value, based on this year's earnings that are projected. So that's coming out in the next few months. But if we held it for another year, there's potentially another 18% on top of the stock. So we don't get out just because it hits our green line at the top or the blue line, or whichever one you're looking at. What we do is we look at the actual chart itself, and we have some key criteria. If the stock drops below the 50-day moving average, which is just the average of the last 50-day closing prices here, that's this green line here. If the stock drops below there, then we're almost certainly going to sell, but we'll look for excuses on why we wouldn't actually come out of the stock. So, and you can see here, we're never going to actually come out of the stock right at the peak. We don't try and time it like that. In the same way, we don't get in right at the bottom. We came in here, the best price would have been back here. But we waited for confirmation that all our rules are in place. And one of the rules to exit is it above its moving average there? So because the moving average is so low here, we've got, how much in? We've got about a 15% drop. We might use something like the super trend or something like that, or even this 10-day moving average is a little bit close, but we could use that as well. And then we'd use, that's where we're going to look at the trigger points for coming out and saying, okay, we'll take our profits.
If I may add, Liam, then the entire exit process is described in our course in the Learn section on the website. There's, I think it's 4 videos, something like that, about it.
Yep. So there is help to be found also in regards to when you hear words you don't understand. There's help sections everywhere that you can look into and be explained what's going on. And also in regards to, even though that you look for green, then how much red can you bear and stuff like that. There is a lot of help sessions to be had. One thing that we do is that, of course, we take your questions, as we said, but we'll also ask you questions, because on Tuesdays we have our Tuesday poll. And no, it's not about the election in Denmark. I promise that. We're gonna, I'm almost gonna promise that we're gonna make it more interesting than that. And it's also not gonna be a yes and no question, because that would be too easy. What we're looking into is, how is the market gonna react to Nvidia's numbers? We're gonna make a charge. Hans-Henrik, Liam, what are we gonna ask here?
Well, we basically just want to ask people what they think, how they think Nvidia will react to the earnings. And I know it's a bit of a guessing game because no one knows it, but it's a bit fun to see if overall over the several Facebook groups we have, how good people actually are at estimating where it will end. There are some hopes in there, of course, as well.
Yeah, I'll save my question for you two guys to what you believe the swing is going to be, if it's going to be up or down. But I'm going to confront you with number of the day, 2.41%, and that was a positive, plus 2.41%. If you invested in Bitcoin at the start of the year, you would have been up by 2.41%.
Wow.
Yeah. Isn't that impressive? If you had taken the S&P 500 and done an ETF on that, spread all over, you would have been up by 15.77. But I'm going to stop right there, because that's in dollars. So you have to take the fluctuation of the dollar into that, and it wouldn't have been that much.
Bitcoin would have been in minus 10% if you were sitting in Denmark buying Bitcoins. And
and if you've gone into the Copenhagen C25, one thing is that you would have been in kroners, so you kind of know where you were at, but you would have been down by 3.27%.
Do many people trade that?
Yes, because the C25 is Novo, or Novo is C25. So
the Irishman spoke up here at the end, but that's okay. That's why we have him on the show, is to confront our stains with all kinds of things that he shouldn't confront us with. We are coming to the end of the show, but just before we go, there is other things going on in the market apart from Nvidia coming with numbers this Wednesday, and it's going to happen after the market close Wednesday evening. Thursday, we're going to have an extra show, but there's also numbers coming out from Home Depot, PDD Holding, Medtronic, Trip, Baidu, and that's tomorrow alone. Wednesday, well, it is Nvidia, but also TJ Maxx, Palo Alto Networks, Loves, and John Deere is going to tell us a little bit about how the temperature is in the American agriculture business. And remember, We have articles and indexes on all our pages and platforms. On Facebook as well, you can see at least the headlines for it. And do you have questions for Hans Henrik and Liam, then write us at FOMO@MyStockScanner.com. Before we go, Hans Henrik, one thing, I'm going to look over to my right now and see gold is barely moving today. It's down just a little bit, but we haven't talked about it. What's going on with gold? Is it going to rise today? Is it going to flatten out? What's
impossible to say what it'll do today, but in the longer term, we think there's a tendency to central banks buying up gold right now instead of dollars, so that should be an upward pressure.
Liam, I'm going to ask you about crypto because it took a beating over the weekend. I see it's up a little bit on the chart here. Bitcoin is sitting at 95,600. Is it going to bounce back?
My official answer is I'm not sure I actually care that much because it's not something that I'm personally that interested in investing in, but I know other people are. Is it going to bounce back? It's a risk-on mechanism that we use at the moment. It seems to be pretty good at telling us when the market's going to go up and when it's not. So I'm more interested in looking at what it does so I can work out what other, what retail investors are really thinking about the rest of the market.
See, that's the close for today on MyStockScanner Live. Until Wednesday, where we will be back with the result of the Tuesday poll, the Wednesday watch list, and we'll warm up to the numbers for Nvidia, and we will have a stock of the day. As we always say, stay curious, stay disciplined, and stay guided by the 3-point playbook. Happy investing, you guys. See you on Wednesday.